Hey, good afternoon, everyone. Today is February 24th, Friday. This is Trader Tim from eMiniMind, taking a look at the markets from the week that was. A similar close to this week as we saw last week. Sort of a couple of inside days back here, a little bit of consolidation, getting that this week, more consolidation. And one question I get a lot is, as we're starting the day, how do you know if it's going to be a good day or a lousy day? And one thing that you can look at on the 512 tick chart, which is the chart that I use to trade the E-mini S&P the most, is in the pre-market. And so what I like to do when I first come into the day is just to see what was going on in the overnight session. Do we have a series of retracements that are moving in one direction or another? And in this case, this morning, it wasn't a incredibly great overnight session in terms of the number of setups, but we had some swing highs and swing lows established. And so I can make this a little bigger. And so by having these swing highs and lows established in the overnight, the market open was right about here. So we have a reference point in the overnight trading session. We can see in the first couple of minutes the market broke the most recent swing high, meaning this high right after the market opened, about a minute after, broke the previous swing high. Then we pulled back to the first 50% retracement long. Market pulled back to the 50 and ran up to its negative 23% target. So if we fast forward to just trading hours only, knowing that we've got some patterns occurring in the pre-market, now that we've established a trading hours only low and high, and knowing that we broke some swing highs in the overnight session, drawing for the first setup of the day, lows to highs, traded nicely at its 50% retracement, and then not only did it go to its negative 23% target, it went all the way to the 61.8. So the way to manage the trade is to, what I like to do, begin with a -6 stop or a 6-tick stop, and I'll leave the stop alone until we break out of highs, so break the swing high up here. Once we do that, then I'll start trailing my stop underneath each candle's low until we get taken out of the trade. In this case, the trail stop gets you out right about at the target. Now, sometimes the market runs much further beyond the target, and so the trail stop will get you out a lot higher. If you've got a couple of contracts, you can do a combination of setting one target at the actual negative 23, perhaps, and then trailing the second, or using a variety of trail stop methods, or just use the same trail stop method with all the contracts. But that's kind of how I assess the morning going into the day. If it's a real nasty overnight session and the first 15 minutes is also crummy, nasty, not really any movement, no direction established, then I'll be a little bit more patient. If it's a good-looking overnight session, like we saw last night, at least in terms of some retracements that have formed highs and lows, so we've got some anchor points that we can have a line in the sand to break, a swing high, a low, those sorts of things, then it's more likely that you'll have a good opportunity in the trading day in the morning. In part because a lot of these, this type of trading with a Fibonacci retracement, you have a lot of computerized systems out there, and while the computerized systems were designed by human beings, they need quantifiable anchor points. They need actual data on the chart to be able to do their calculations to get the 50% to know to automatically place the order. And so when you have a market that is acting with nice higher highs, higher lows, lower highs, you have a little bit more quantifiable data that you can then rely on for your entries, just as the computerized systems are doing for theirs. So I hope everyone has a great weekend. If you have questions, shoot me an email, tim@eMoneyMind, and be sure to check out all the content over at eMoneyMind.com. Thanks, everyone. Have a good one.